China and Russia are coming together to form a new alliance, and their main mission is to take down the US dollar. The enemy of my enemy is my friend. Now, we have talked endlessly about how China has been supporting Russia throughout the conflict in Europe. Russia has been selling discounted oil to China to escape the sanctions, but this time, they have taken their partnership to a whole new level. China has agreed to pay for Russian gas in rubles and the Chinese yuan. Now, this is a game changer on two fronts, and we need to understand this. And the first punch is obvious. They are showing the world that you can transact and buy energy in huge amounts without using the world reserve currency. You don't need to use the US dollar anymore. Gazprom CEO Alexei Miller stated, the new payment mechanism is a mutually beneficial, timely, reliable, and practical solution. In fact, he specifically highlighted this will become an excellent example for other companies, meaning that if you want to buy Russian oil or gas, we will accept the Chinese yuan or the ruble. And the Eastern Alliance coming together should be very shocking to the United States because they are now working on something concrete. They are helping each other de-dollarize, become self-sufficient, and sanction-proof. And there's a running joke that Russia is the world's gas station and China is the world's factory, and there is a lot of truth to that. Russia is extremely rich in natural resources. They are the top oil products exporter and the third largest producer of oil in the world. However, they really don't manufacture much stuff. They sell commodities to the world. Now, China is very different. Yes, they harvest a lot of commodities as well. They are number 6 in oil production and the top gold producer in the world. But they consume so much energy and metals that they are a net importer of commodities. But China exports tons of stuff to the world. Your computers, your furniture, your clothes, and your iPhones all come from China. They have been the world's top exporter since 2009. So this marriage of Russia and China together effectively shores up their weaknesses. It effectively allows them to function independently from the West, at least for quite a while. And that is why all the sanctions in the world aren't really doing much damage to Russia at this point. Together with China, they are becoming more of an autarky, which means an independent and self-sufficient economy. Now, this is where things get really interesting. By China paying in yuan and rubles, they are saying to the world that these currencies can be exchanged for Russian commodities. And remember, right now, Russia is selling their oil to India and China at a discount because the West has essentially sanctioned them to hell. And it doesn't make sense for Putin to go along with the G7 oil price cap and let them dictate the price of Russian oil. In fact, he specifically mentioned a price cap is a stupid idea and that Europe needs to come to their senses. And this is a subtle way of telling other countries, especially the rest of the BRICS, that hey, we should work together and start trading using our own set of currencies. Let's trade in the Indian rupee. Let's trade using the South African rand. Let's use the Chinese yuan to trade amongst ourselves. And if you need stuff, China will provide it. If you need commodities, Russia will deliver them. And this effectively challenges the current world order that revolves around the US dollar. We are moving towards a multipolar world, and I believe this is just the first step to what Ray Dalio calls the changing world order. And here's the funny part. China knows that many countries, especially in Europe, are starving for energy. So China is effectively buying up lots of Russian gas, liquefying it to LNG, and then selling it to Europe at huge markups. They are becoming filthy rich, and they are the true winners of the sanctions. Now, the second punch of this energy deal is how both China and Russia are helping each other de-dollarize, and I think it's no surprise now that these two countries are scrambling to reduce their reliance on the US dollar. Russia had over $300 billion frozen back in March, and ever since then, China has been dumping treasuries rather aggressively for 7 straight months. They are now well below the $1 trillion mark, holding less than $970 billion worth of US debt. In fact, since 2015, Russia has been de-dollarizing their bilateral trade with China. They have been accepting fewer and fewer dollars for the stuff and commodities that they sell, and now they're also going to slowly diversify away from the euro as well. Remember, because of the sanctions, Dollars and euros are as good as monopoly money if Russia wants to trade with the West. So by trading exclusively with rubles or the yuan, it benefits Russia and the Eastern Alliance more. And at this point, it doesn't matter which currency Russia takes. It's a win-win situation either way. If China pays them in rubles for gas, it just strengthens the case that the Russian ruble is a currency that countries can use to buy commodities. However, if China decides to pay Russian yuan, it is also useful. They can use the Chinese currency to buy finished goods from China. We are talking about valuable products like microchips, smartphones, and computers, stuff that Russia just can't make on their own. And if the new BRICS currency does take off, it'll be that much easier to facilitate trade using the yuan because China is still a much larger economy than Russia. But make no mistake, this goes beyond just trying to safeguard their assets from sanctions. The underlying motivation is to punch a hole in the dollar's dominance and cast doubt on it as a global reserve currency. It will take time, possibly decades, but this is a powerful first step that we can't deny. But if Russia continues to sell their commodities at a discount using their currency, this will also speed up the de-dollarization process. Times are tough and nations are struggling. There are going to be buyers and takers for these cheap commodities. And like India, every country wants the best deal for themselves. And the West can throw all the sanctions that they want, but it is impossible to sanction the whole world. However, I want us to take a bigger macro view of this oil for yuan strategy. Doing a deal with Russia won't impact the world immediately. It is still a small step. But the real fireworks will be if Saudi Arabia makes a deal with China to ditch the dollar and sell their oil for yuan. And we have talked about this for quite a while. Since March this year, China has approached Saudi Arabia with the same deal. Our Chinese yuan for your oil, and the Saudis are still thinking about it. They are weighing the pros and the cons. They are considering which is more painful, pissing off the United States or having to hold dollars and effectively subsidizing the US economy. And it's really a tough choice because the yuan still isn't a convertible currency or freely tradable around the world yet. While the US dollar has been horribly mismanaged and their insane stockpile of dollars can theoretically be sanctioned away. But it is still a tough sell because Saudi Arabia still depends on the US for military protection. So right now, the country with the most leverage in the world, the most powerful country in the world today, I would argue, is Saudi Arabia. Europe is dependent on them for energy. America needs the Saudis on their side, while China is trying to convince them to de-dollarize, and they are taking full advantage of this situation. OPEC has just agreed to cut their oil production by 100,000 barrels per day, and that is when the whole world, especially Europe, is now in an energy crisis. Winter is coming, but Saudi Arabia is trying to protect their profits. The higher the price of oil, the more money they make, and we can't really blame them. Globalization is slowly breaking down, and who knows what tomorrow will bring, so might as well rake in more profits today. And in a stunning report, we now have Russia about to overhaul their forex reserves by buying up huge amount of currencies from friendly countries. We are talking about as much as $70 billion worth of yuan and other friendly currencies. And according to the report, Russia has admitted to the pain caused by the sanctions. They stated the frozen $300 billion were of no help to Russia. On the contrary, they became a vulnerability and a symbol of missed opportunities. And they are now going to take more preventive measures by accumulating liquid foreign exchange reserves for future crises. And Russia knows it will be a slow and painful process, but they have no choice. They can't hold any of the G7's countries' currencies, so they are looking at emerging market options like the Indian rupee and the Chinese yuan. And this move alone is going to polarize the world even further. Russia is going to use the windfall from their oil and gas profits to invest in those currencies, and there's a good chance their earnings will keep climbing, right? The oil price cap will likely not have much of an effect because if Russia continues to stop supplying Europe, gas prices will continue to soar. And there's now China here ready to buy cheaper Russian gas and sell it back to Europe at insane prices. So we really got to understand that the dollar might be sitting pretty today, but there are global events that are slowly stacking up. that is threatening its dominance. It won't be an overnight affair, it'll be a slow grind, death by 1,000 cuts, and one day we'll suddenly wake up and get a rude wake-up call that the dollar is now below 50% of reserve currencies, and that will be shocking. So I really want us to understand the situation and not act shocked when it happens. China and Russia are now working together trying to tag team the US dollar. In fact, we can see that both Russia and China's combined US Treasury holdings are decreasing, dropping hard, especially in 2022. And guess what? They are both diversifying into. They are taking those dollars and buying gold, the universal neutral asset. China and Russia no longer trust the US dollar or any other dollar assets. So I hope this is a wake-up call for you as well. This isn't a conspiracy or figment of your imagination. It is happening today. Moves are being made against the dollar, and we need to prepare for what's to come. For me, that is buying hard assets including gold, because it is undeniable that the dollar has been mismanaged for too long. The Fed has exported too much inflation all over the world thanks to their money printing, and now all these rate hikes are triggering currency crisis across the globe, from Sri Lanka all the way to Egypt. So countries across the world, they are unblind to this. Right now, they have no choice but to scramble to get dollars to settle their obligations. And that's why we can see the dollar index soaring, but it is out of necessities. Central banks are starting to stack more gold because they are trying to find a way out and protect their own assets as well. And we need to carefully watch the bilateral trade between countries to see if more and more of them are accepting alternative currencies. And if the birthplace of the petrodollar, Saudi Arabia, decides one day to accept yuan for their oil, this will start the domino effect. Other countries must start thinking maybe it's time to do the same. So let me know what you think in the comments below. Will more countries start to ditch the dollar, or is there truly no better alternative and we are stuck with it for the foreseeable future? Let me know in the comments below. Stay safe, be sure to smash the like button, subscribe as we navigate through these crazy times.